founding partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the continuation in a LawCast series talking about reverse merger transactions. Today I'm talking about the costs of the transaction, including acquiring a controlling interest in the public company. In a reverse merger transaction, the shareholders of a private operating business obtain a majority controlling interest in a public company, and they must pay for that controlling interest. That payment may be in cash, equity, or both. In addition to the cost of the controlling interest, the private entity must complete an audit and pay attorney's fees associated with the transaction and closing 8K or Super 8K. I generally suggest that clients budget approximately $125,000 for costs and expenses above and beyond the cost of the public company, though many transactions can be completed for less. Although attorney time is similar for transactions big and small, the audit and accounting fees vary greatly depending on the maturity and complexity of the company. As for the cash price of a public entity, it can vary and it changes over time. Currently, the average cash value of a fully reporting public company with no liabilities and which is otherwise clean in today's market is between $275,000 and $375,000. The cash is usually paid to the public company's control shareholders in exchange for relinquishing their control ownership. However, it may also be structured such as that it is paid to the public company itself and used to satisfy debts. The price variance depends on many factors, such as whether the public entity is a shell or has an existing operating business. And even if it does not claim itself a shell, whether it could be considered one under SEC footnote 32. The necessity to complete changes to the capital structure of the public company in the form of a stock split, the existence of liabilities, negative history of the public entity such as prior regulatory actions against the company or its former officers, directors, or control shareholders, though as a side note, in today's regulatory environment, negative history is simply a deal killer. Another consideration is the ultimate percent ownership that will be owned by the private operating company's shareholders, how quickly the transaction can be closed and completed, whether the entities have complete due diligence packages, and whether any broker-dealers or investment bankers must be paid in association with the transaction. Where the private operating business is paying for the public shell entity with equity, the current shareholders of the public shell company keep a negotiated portion of their pre-closing equity and therefore own a greater percent of the new combined company's post-closing than they would in a cash transaction. For example, in a cash transaction, the operating business shareholders may end up owning 90% or more of the combined entity's post-closing. Whereas in an equity transaction, the operating business shareholders may end up only owning 70%. No matter what, for the transaction to qualify as a reverse merger and result in the private company going public via reverse merger, the private company shareholders must end up owning over 50% of the combined entities post-closing. The percentage of ownership maintained by the public company shareholders will depend on the perceived value of the private operating company and an expectation of what the value of their share ownership could be in the future. Accordingly, in an equity transaction, the parties to the reverse merger will negotiate the value of the private operating business. In an equity deal, the public company shareholders may have to decide whether to accept $350,000 in cash today or maintain a stock ownership level that they hope will be worth much more than that at some time in the future. From the private operating company's perspective, they are diluting their current ownership and giving up a piece of the pie. I'm securities attorney Laura Anthony, founding partner of Legal and Compliance and producer of Lawcast. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.